Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So, as it usually happens in recent time, the statistics intrudes in the technical performance of the market and bring real mess. So, as you can see yesterday, non-farm payrolls release, although they were really very close to the expectations, but drop in all the earnings and low unemployment rate has made some impact on the minds of the investors and makes them think that we're coming to the soft landing and that economy is strong, this job market is strong, and so on. So it's usually comments from the Jerome Powell. So in today's weekly report, guys, we have explained why we're not really agree with this position and why we think that current euphoria and inspiration market hardly will last for a long term. We show on the real statistics why it is not so, because we just not agree with the situation, but we prove why it stands differently based on real statistics numbers, and we show what's really going on, why the job market still stands in a positive way, while we see a deterioration in other spheres and across the board in markets, and especially in consumption, real estate, production, manufacturing, even the services. So currently all PMIs now is going lower, and why it doesn't touch the job market. So we're explaining in the report the background and what we expect in general on the job market and how it will change and by what factors it will change. And we think that it will happen sooner rather than later. So probably somewhere in the end of the winter, close to the spring, March, April, we should see the visible changes, evident changes in the market. Meantime, in the short term, based on the technical picture, although it's currently the big question how we could rely purely on the technical side, just because next week we'll get the CPI numbers that also could bring some mess in the performance. But let's deal with the things that we have. So on the technical picture in general, the reversal from the technical point of view was not a surprise, because on Friday before the report we said the downside targets tend to around 104.60, 104.30. This is 104.45 XOP target, but it was not quite reached, slightly has not been reached by the market, and shows a reversal and jump up. As a result, we have got the bullish reversal session. This market created new lows and closed above the top of the previous session. And since we've got here the strong support area, this type of action is not surprising in general, but it was surprising how this happened on the intraday charts. Mostly this is understandable just because our action was triggered by statistics, and that's why every time when we have the statistics release we warned you about possible negative surprises and scenarios, because it's not suitable to all traders to deal with it. Personally, I prefer to not trade in the moments of the big statistics releases, on the FOMC meetings, and so on, because the situation as a rule stands out of your control, and you're just a victim on the possible games from the market makers and so on. I did not like it. So anyway, on the weekly chart, we have also the bullish trend, bullish context, but the problem is that on the weekly chart, market stands at the 1750 resistance. It's confidence resistance. And this puts some limitations on the trading process on the lower time frames. In particular, speaking on the daily chart, if on the weekly chart we're not considering taking a long position at all, because market stands there at resistance on the daily chart, it's lower scale, and here we could speak about the taking a long position, but the target anyway will be around 107.50. It's just because this is resistance on the weekly chart, and this is most probable level where market will just hit the border, hit the limit. Besides, if we'll take a look at overbought, so maybe it will be also around, somewhere around the previous top, slightly higher. It's around 108.30 probably, 109. So it's significantly higher. Anyway, that's the level will be that we should consider as the most realistic target in our prediction. As you can see, if you try to take the position immediately, the risk reward will be not in your favor. It's because it is distance to the target and distance to a potential stop loss order, which makes risk reward ratio not attractive. It means that anyway, if you even would like to go long, you have to wait for some pullback here. This level will be also some kind of the invalidation for the short-term setup, and this will be the area where you have to place your stop if you will consider taking the long position on your currency. So that's what about the daily. On the hourly chart, take a look. Although the divergence that we were considering was looking unrealistic on Friday, but anyway, it has worked. And as you can see, market taking out of this top, the top between two bottoms of the divergence. This is minimum target. This is our reversal bullish swing. So here, since we have the reversal swing, the chance on a deep retracement stands relatively high. Besides, market is forming some kind of the widening consolidation, widening triangle. It means that the deep retracement is also very probable. You could think even in the terms of the possible head and shoulders or something of that sort here. And besides, as I said already, that risk reward stands not in our favor right now, and anyway you have to wait for a pullback. And 105.44 area, it's more or less acceptable to consider position taking around it. So in this case, risk reward probably will be positive and stands acceptable. And here we could think about position taking depending on what the performance market will show here, whether it will not be some kind of this type of action. If I will get this collapse, definitely we're not considering taking the long position. So that being said, in the current circumstances, based on recent performance on the daily trend, hourly trend, weekly trend stands bullish, we are not considering taking the short position by far. Besides, we do not have any clear bearish patterns. On Friday, we have strong upside impulse. It's also not very good idea to go against it right now. So that's we have the ability to consider only the bullish position. But for position taking, we have to wait for a deep pullback, which is because currently the risk reward ratio is not attractive. So that's why our conclusion is to consider long entry, probably long position taken, somewhere around 105.45 fib support area. So that is some approximate trading plan for beginning of the week. And let's see what the performance market will show on Monday, Tuesday, and we will see what to do next and how market will perform around this level.